Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Friday, December 27th, 2019. We do have some things worth noting today. We don't have the confirmed sell signals, those near-term sell signals on NQ and ES that I was talking about recently. Here, let me back up and start out with this morning's the first post this morning. Small caps break down, large caps very close. In that post, members, by the way, or anybody that's come into the site, I've restored the zoom function, so you can either just, if you have a mouse, you can double click on the chart to expand it, or you can zoom it with a mouse scroll wheel in and out if you want to see the levels a little bit better. Here, for example, you pan it and drag it down, you can see. So this was this morning. Our small caps made an impulsive breakdown, and at the time I said I was on watch for potential bear flag, and I did an update today. Members, I did an update midday session on palladium, the markets, of course, a brief update, palladium, crude oil, gold, US dollar, Bitcoin, and I think that was about it. And in that, I said the reason I was expecting the flagging action on the small caps is because at the very same time that they broke down and that big red candle was there, you had the large caps coming right off support here, hitting that trend line support. So we had a perfect test and reversal off trend line support. Again, these charts were taken this morning with a sell signal to come on a solid break and or 60-minute close. If you wait for the 60-minute close, that's where you have a much higher probability that the trade will stick. Again, we're talking some near-term pullback targets. I'll go over those in a second here. And you can see here on ES as well, the S&P 500 futures right there. Same thing this morning, just a perfect kiss and reversal off that level. Again, that was then, this is now. Let's see what happened since. So right before the close, this is the updated chart on NQ, live chart. We had a breakdown. We had an impulsive breakdown, but see what happened? It's almost comical the way these algos work. They took it, broke it down, but a little before the close. You always want to be a little bit skeptical, or maybe a lot bit skeptical of a breakdown before the close, because anything can happen end of day, especially when the buying comes in. If you look closely on QQQ, this was the breakdown right here, and this is a 1-minute chart I just flipped to. We were just looking at a 60-minute chart on NQ. You can see the impulsive selling right there, and then they turned around seconds or minutes before the close right there with just about a minute or a couple minutes to go, and reversed it back up to park it. You got it right on those trend lines. I mean, you can't make this stuff up. And the algos see the levels. Now I'm going to go out on a limb here and say we gap down on Monday. These trend lines, these overbought conditions are getting extensive enough. In addition to the midday video I did covering the markets and precious metals and some other things there, I posted for subscribers some detailed analysis on both Apple and QQQ with some price targets and everything else, some extreme overbought conditions and other developments to note. So it looks like we're getting ripe for the breakdown. So do we have a sell signal? Technically, no, because you can see they took it down there. Tried to draw in some shorts, tried to scare out some longs, blow some stops, and then reversed it right back. Markets are closed now, but when I'm sorry, the regular session, but the futures are still trading. At 4 p.m. we parked it right back up on or a hair above that trend line, and you can see we're pretty much flirting with it now. Again, this is NQ zooming in, and I'm going to show you ES in a second. So everything pointed out before, we continue to diverge, we continue to hit extreme overbought readings, which in the past didn't bode so well, at least for the near-term outlook. In this case we consolidated. We didn't really correct in price, but we certainly corrected in time right there after that one. This one here, you put in a divergent high, made a marginal new high, corrected. Same as the analysis I showed you on Apple for subscribers earlier today on the daily chart with what I call double tap readings. You get those double tap overbought readings, and that's usually it. So let's see. We'll see what happens, but we have it all, everything that we've had in those previous corrections like that. In this case, a divergent high. And again, right now, there's really we can't make a case for anything more than a near-term pullback based on these 60-minute charts. But there are developments, again, that were posted earlier on the daily charts and weekly charts that we have to watch, because something as simple as a 3% or so correction from where we're at now, depending on how it looks. For example, let's just say we come on down, we blow through that first support zone, target zone right there, and we come on all the way down here to this potential target about 84, 86, and that's a drop of about 3.4%. How does it happen if we get it? Now, I know the trend is extremely resilient. That's why I keep saying give it the benefit of the doubt. You want to see solid sell signals, and we don't have those yet. But if we had a 3+% drop, and go back to the QQQ chart, go to the daily chart, and let's see what that might look like here. Let me turn off the, well, no, let me do it this way. Let me draw a line, measure it down, measure about a 3% drop. And let's see, that's 3, right about there. So I need to shorten that line up a little bit and move it over here. So what that would do, this is the way I factor in analysis. So let's just say that 3% drop played out on the 60-minute charts. Well, what it would then do is trigger a breakdown here of this uptrend line right there off the early October lows, and that would give us a more powerful sell signal. And if we did it on Monday, let's just say again, this is just a potential possibility. Certainly doesn't seem that way right now with the trend being so resilient, but just something to watch for. And again, in that post that I made earlier today on Apple and the markets, I addressed the fact, Randy, why are you posting, these potential bearish setups and we're one of the strongest rallies in a long time? And I said simply because I get those levels and developments to watch for out in advance. It does me, and especially you, no good to post hindsight analysis after something has happened, after you get a big move down. So the levels are there for you to watch, and of course it's your call whether you decide to take it or not. Again, we're in an uptrend right now, but the RR, the risk reward, doesn't seem attractive. So there's a very short term. That's that short term trend line I just showed you on the 60-minute chart. But what I was drawing here, this would be just an example of a big red. Let's just say Monday happened to be a big down day, catches everybody off guard. And what that would do, if we had a candle that looked like this or even close, you would have a bearish engulfing candle, and that could easily see it. If you look back here when volatility picks up, after a strong uptrend, you see these big candles back here. It is not unusual when the VIX spikes and volatility spikes to see a 2, sometimes even a 3% down day in the markets, and that's why I picked that number there. 3% there's no hard number, but that's usually about it. That's usually about what you're seeing, unless you're in full-blown 2008 meltdown mode. 3% is about it for a bad down day, and there's a line roughly 3%. So what I'm trying to show you there is what that would do or could do, whether it's Monday or 3 months from now. What it could do is wipe out several days and even weeks of gains, and that's what we call a bearish engulfing candlestick. So the point of all this is, although right now I'm focused on the call it the micro world of the 60-minute charts, just looking for that next tradable pullback correction of 2-3%. If you trade futures, or you day trade, a 1-2% gain is actually because you're leveraging up and you're controlling your risk by closing positions out overnight, or you can let it run in the futures. That's why I like futures. Back in the old days when I used to day trade QQQ or SPY, or even when I trade stocks, I have to make a decision every night as a swing, if I'm swing trading, to go home or not go home with that position, and knowing that you're going to have overnight risk. If something big happens overnight, whether it's with the market or your individual stock, news headlines, it can gap down, and you can't control that. We can't mitigate that risk because stops get blown right past on an opening gap. Nothing you can do about it other than have options on your position to contain your losses, and that gets expensive. So where I'm going with this is, these are things to look for, and if you had it, for example, whether it comes now or down the road, you could wipe out several days or even weeks of candles. And then if you did and you broke this trend line here, you could have a longer term sell signal, and instead of looking for these 1, 2, 3, 4% pullback targets, that would open the door for a bigger drop. And again, yes, the trend is resilient. Yes, the market's at new highs, and it may continue to do so, and we might not have these sell signals, but you want, as a trader, you want to have a game plan every day when you go into trading. Every week, what are the levels to watch? Where are things going to change? Where do I go from buying the dips and pullbacks to support to setting stop losses on my longs or entering short trades? And it's all about having a trading plan. What you're going to buy or sell, where you're going to buy or sell it, why. And so we look for these developments, and again, depending on what happens on these 60-minute charts, then we may turn our focus to the longer term daily and weekly time frames. So there's QQQ. We can play around with this uptrend line. It's a 60-minute trend line. As I showed you on the futures, they cracked it. Even here, you roll this in tight, nice and tight. You can see a intra-period break right there. This is the last candle of the day. So let me move that line up. Actually, I moved it. Right, get it right up on there. There it is. So you can see an intra-period break, and we closed effectively right back on the trend line there. So these are the levels to watch next week. And I mentioned before and earlier again today, a minimum target, I think right now, should we get those sell signals. And remember, all the bearish talk in the world means nothing. There is a very big difference between a trade setup and an actionable trade. So although I think we'll get that, these look ripe to pop, probably gap down and go on Monday. If you want to play it safe, you can wait for that. Now, if you gap down, here's your first support. So let's just say an opening gap of 1% down. No, about 0.9% or so down, 1% takes you to the first support level. So then you get that problem where it's a little sticky. It's not really objective to short on support. You may get a kickback rally. But I do think we come down at bare minimum down here to that around the top of that gap from, what was that, Monday, December 16th at about 209, a little bit north of that. The gap's a little lower, but I have most of the resistance or support there's about 209.10 or so. And then I think there's a good chance that they'll backfill that gap. So that gives us, assuming we do get the sell signals next week, about a 2.8%, almost 3% drop in QQQ. And let's just go from there. If we don't have a sell signal, again, I'm just talking about things that may happen and haven't yet happened. So we'll just have to reassess the charts if we continue to walk higher. I'm going to move that trend line like this. As you can see here, I just did that on QQQ 60-minute to come in and capture that reaction low from that second to last 60-minute candle today. I think that makes a nice clean fit. So there's your levels to watch. You can set a price alert, and that way, if you're not a full-time trader, most charting programs will send an email or a text or whatever when you get your sell triggers, and then look at it again. What time of day? You would have got that alert today if you had a trend line a little tighter. You would have had it a few minutes before the close, especially heading into weekend, so you might have opted past. I personally liked it, so I took some shorts home, again, for various reasons, including some of the things I covered in the video today, and the outlook of the markets, and the fact that we've already had, as I've mentioned too recently, the SPY has broken down, as did IWM, the small caps, but they didn't go anywhere. Why? Because the leader, make no mistake about it, the S&P 500 is 500 stocks. It's much more representative of the stock market and the economy because you have 11 diversified sectors, whereas QQQ or the NASDAQ 100 is concentrated. About half of the holdings are in technology stocks, and you don't have financials in some other sectors yet. Tech is the market, make no mistake about it. If you doubt me, just pull up charts of the FANG stocks, Facebook, Amazon, Microsoft, Alphabet, and look at the performance of those stocks, and more importantly, look at the weighting in the markets. Or you can also keep it simple, look at XLK, overlay a chart of XLK, and then QQQ, and you'll see they're pretty much one and the same. XLK is a tech ETF. So the markets, the broad market, it broke down below that 60-minute trend line, and it went up and it back tested because QQQ has remained above trend. Like I say, it's all about the Qs, so that's why I've spent most of the time covering the NQ, NASDAQ 100 futures chart, and the and then one of my favorites right now is IWM. That broke down, nice clean wedge, an impulsive breakdown. You can see it right there, very impulsive breakdown. And then earlier today, again in that post I put out this morning, updating the futures, I said we'd probably get a flagging action in the small caps because the large caps just hit and held support. So expected them to bounce, a little bounce, and then go on a breakdown, and that's exactly what's happened so far. So this also plays into my reasoning for going home short, even though I keep saying that yes, you need QQQ to break down. Nothing heavy, but at least a starter position. So if we do gap down on Monday, then I can add to that if it's still objective at the time. and I'll have a better cost basis than I would have just if I chased a gap down, in case that's how things play out next week. So there you can see, you can draw it either way. You can draw a line like that, and there's your bull flag, or you can put a little downtrend line there, and that's called a bear flag pattern. And or you can do that, and that's a bearish pennant. They're the same exact net effect. Pennant just takes the form of a pennant like that, whereas a flag takes the form of a upward sloping flag. There's your flagpole. That was a consolidation because the large caps held support, but then boom, the smallies, they want to go. The only thing holding them up so far, as I said, is the fact the large caps haven't broken down, but these guys have broken down. So I'm short. I've been short these guys since this morning, and I will go home short the small caps, and I think they will lead to the downside. That's, I think, where there's more bang for your buck. But NQ, once it breaks, should probably could easily keep pace. I don't trade ES often because, like I said, when you go long or short ES, since it's so diversified, and ES is the S&P 500 futures, guys, or SPY, if you're trading SPY, remember, if you go long, you're buying the most bearish stocks, the most bearish sectors, along with the most bullish. There's so much dilution, there's so much diversity in there that it holds back the gains on the way up, and during corrections, the S&P tends to fall less than the tech-heavy NASDAQ 100 or even the small caps. But again, trade with what you're comfortable with. I know a lot of people do trade it. That's why I share the levels. And again, you can see from the small caps, from the breakdown, the flag is broken down. So it's about another 0.8% to my first target there, and my preferred swing target is down here in this 116.40-ish level, and that's about a little from where we're at now, about 1.86%. But from the top so far, that would constitute a drop of about almost 3% if that target is hit. And again, if and how we get there will then determine where we go from there. That's, like I say, the charts are dynamic, and so is my analysis. So at that point, I'll turn my focus out to this daily chart. Look at this larger wedge pattern here. How does that project? Are we going to come in and make another back test to that 159.41 level? And if so, that would be a much larger drop. You're talking, let me move that line there. That could be a drop of about, well, it still has us about 4% right there. The near-term pullback target for RTY. And I'll just conclude with this chart of Apple, again, talk about those, what I call double tap overbought readings. So what I've done is every chart is different, every stock is different. Normally when you're using an RSI, which indicates overbought or oversold conditions, the standard levels are the 70 level, which right there is the red line, overbought, and the 30 level, which is oversold. But all stocks are different, so I don't really put a lot of stock into the default levels unless they work well for that particular stock. So here's Apple going back the last couple of years. You can see well into 2018, and so I put a line at about 80, which is the extreme overbought conditions. So what I have, I call these double tap readings. When you have two overbought readings in close proximity, it's really almost one of the same, so what's happened is the biggest corrections in years, this was I think 39% drop if I'm not mistaken. There was the biggest drop so far in 2019, and we'll see if history repeats. It doesn't always repeat, but it often rhymes. And I had mentioned in the post earlier today that back here what happened, you had the double tap right there. That was about a 1.25 was a marginal new high. It lasted for about 3-4 weeks. I think it was just about 4 weeks later came a marginal new high, and what it did is we didn't have at the double tap reading, I'm sorry, the double taps were here and here, those overbought readings, but we didn't have any divergence at the second reading when we hit the double tap right there. But what we did do is we went on and then put in a divergent high. So that marginal new high gave us negative divergence. That's what you like to see. It's not absolutely necessary, but most big major tops and bottoms come with positive or negative divergence. Here we had the double tap right there, and we had it with a divergent high. You can see the negative divergence. These are your divergence lines, and they're also there on the RSI. You can see the white lines above. And so there was our first overbought reading, extreme, I should say, extreme overbought reading in Apple back there. And what happened is it corrected mostly in time, a little bit in price, but went on, pushed up, and then gave us the divergent high and that second double tap reading. So, this is the world's largest stock, or, well, I don't know what the Saudi Aramco, but I guess that counts now as the world's largest publicly traded company. But this one's the largest in the U.S., the largest component of the NASDAQ 100, a top component of the S&P 500. And so you can see the charts here, and you can see a nice clean price channel. So, at very minimum, if we get those sell signals on the large caps, meaning SPY and QQQ next week, at bare minimum, we're going to come, I think, back down and test and have another test to this channel. It hasn't been tested in a while. Depending on where and when we hit it, that'd be about a 3 to 4% drop, maybe 5% from where we're at right now or where we closed today. And again, if that breaks, then that gives us a longer term sell signal, just like you had in the past when we had similar conditions. Like I always say, divergences and overbought readings are not, I always say this because people get confused over and over, they are not buy and sell signals. They are an indication that an impending trend change is likely, whether you have bullish or bearish divergence. Sell signals come on breaks of support, whether it's a well-defined horizontal price support level, whether it's a well-defined uptrend line. Sometimes you can get bearish candlestick reversal patterns that will indicate a top, things like that. So those are your sell signals. So make no mistakes about it. We don't have anything even remotely close to a sell signal in Apple. But again, I do these in advance, so you know what to look for, and then you can react maybe a little faster than most out there, and get if you're in something like Apple and you want to take profits or raise your stops, you can see these levels, and same with the market, and you have your stops a little bit below support. But it depends how much, again, where you've entered that trade, your cost basis, your overall outlook, and what kind of trader you are. If you're a long-term investor or an active trader. So that's all up to you. Anyways, I'm going to wrap it up here. I think that's it. Covered everything I wanted to cover. And again, these are what I'm watching. The those trend lines. Look for solid breaks on Monday. Whatever happens now, futures will shut down tonight, and then they don't open up again for Sunday night. So I don't expect any fireworks. You have a little support below. This is NQ, by the way. And then one more thing I say to watch for is, the PPO. I love to use the PPO signal line, the white line, the 9 EMA, as a trend indicator. And if you are trading, if that line is above the 0 line, then the trend is bullish, as it has been since back here. Told you to stay long. And often the 0 line will act as support during a bullish trend, like it did there, and here. And when you're trading below, the trend is bearish. So in addition to any breakdown that might occur next week, and of course it would help very much to see that 87.45 go. In addition, you want to see the that PPO signal line, that white line, cross well below there, and that would help confirm at least a near-term trend change. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend and happy holidays to everybody.